enable. Tri-Legal presents Mint India Investment Summit and Awards. Knowledge partner, KPMG.
The two-day Mint India Investment Summit 2019 brought who's who of the investment community on a single platform to crystal gaze on how the India story will unfold in the coming months. The event was kicked off with a power-packed panel discussion on private equity buyouts, the new normal.
This is a panel on buyouts, and we have a stellar cast here, the best and the brightest in the industry. Buyout transactions by private equity firms totaled around 8 billion in 2018, give or take. It's the highest in the past 5 years, and it marks a shift, significant shift in the strategy undertaken by private equity firms over the past few years. Let me just kick off straight with Vishal, who's sitting next to me, Vishal Mahadevia from Warburg. They made their first buyout deal in 2006-2007. At a time when buyouts were few and far between. What made you take that leap of faith, and what were your learnings thereafter, and where do you see your path ahead in terms of buyouts?
I think the buyout you're referring to is Alliance Tires. And Alliance Tire was different because what we had was a really talented entrepreneur, Yogesh Mansarya there, who had a choice. We could have done the same. He could have said, invest behind me, let's build a factory to manufacture off-highway tires, which was the business Alliance was in. I'd like to own the majority of this. You come and fund it, and let's grow it. However, he didn't have that type of capital, so it would have meant a smaller scale business. He chose the path, and this is what I give Yogesh credit for even today, and he was 30 years old at the time. He chose the path to say, I am comfortable owning a smaller stake in my business, but building a much larger business and something that could be a global leader. And that's really what led to the buyout and the birth of Alliance Tire.
Moving on, Manish, so your firm has done buyouts across industries, different kinds of companies. What are your experiences? And, they are varied industries. It's not just one industry. So
today, if you see, a lot of the stuff that we've focused on has been in areas which are underappreciated, maybe out of favor sectors, maybe auto components or packaging, where the next generation often doesn't see itself as running the business over the next 40, 50, or 60 years as they might have in the past. In those situations, it becomes critical for them if they see the value that the private equity player can bring. And you really need to demonstrate that to the family, to partner with you in sort of the first stage of the transaction, where you come in and they partially sell their part of their stake in the company to you, and you jointly build out the company together, and then jointly sell the company at a much higher valuation 3 or 4 years later, right? So I think the ability in that situation is when they recognize they aren't long-term owners of this asset over a 20-year period, but at the same time, they see the value that you can provide to jumpstart and grow the business and take it to the next level and then sell it together. So the trick here is to be going in on day one, knowing what the end game will be.
That's a big leap of faith, And so let me ask, Nishant, since you are the legal eagle here, and a lot of the deals go through your desk before they actually fructify. He spoke about, getting the larger family on board and convincing them of, building value over the long term. How do you get all the family members on the same page? What other legal issues do you see arising in such buyouts?
In the case of a buyout deal, for instance, as you rightly mentioned, you have to deal with the seller family. Businesses are held by families, sometimes different branches of families. We come in when we sort of look at the succession laws, how the family arrangement, for instance, very often you'll see family arrangements, you'll see trusts or HUFs within families, and you have to basically study the structures to make sure that ultimately you're buying a business without any adverse claims on title.
Parth, this is for you. So moving from family, your firm did or financed a management buyout. How has that worked for you? Is India ready for management buyouts?
I would say that in the last decade, and even more so as we go ahead, we've seen the availability of strong management teams that one can back. Vishal's was a great example. I mean, for whatever it's worth, it was a management team, if you will, which is backed. And I think the ability to find strong teams which you can back with capital and then go ahead and work actively with that team is strong. I think it's a great thesis.
Sanjay, you're also, I mean, you're one of the older PE firms in India, Chris Capital. 2018 was, as I said, a record year for deals and investments. You raised a $150 million fund this year, 2018, right? And you have said the fund will take buyout bets. Will it be sector specific? Will you do co-investing? What are your strategies for that buyout fund?
So we don't have a specific buyout fund. We have a large, we raised a new fund, and that's our strategy has always been sector driven. So we are focused on 3 or 4 sectors: financial services, IT, pharma, healthcare, and all of that. So consumer, for example, and these are the areas we'll continue to do, buyouts as well.
Thank you, Shashank. You run a fund which has a mixed model. You do both minority as well as buyouts. How do you choose between the two? What drives those investment decisions?
To answer your question, we're if there is a buyout on the table, we look at a buyout. If there's a minority deal on the table, we look at a minority. Often the choice will come down to, in a minority situation, are we really aligned with the promoter or the management team? Do we back their strategy? Because if we do, then it's obviously a lot easier to sort of say, we'll help you at the edges, but really we're not changing course entirely. If we come across a company where we say, most often I'd say, if we come across a company where we say we don't agree with the strategy or the management team needs changing, etc., we're much more comfortable in a buyout scenario. And then the final point with the minority versus buyout is alignment on exit.
Tarun, you're the go-to man for every deal. As head of Kroll, I'm sure a lot of deals come to you for, opening the box, looking at what's inside, checking, looking for bugs. What's been your experience? What needs to be done better to increase or accelerate the pace of buyouts in India?
From our lens, as somebody who does due diligence and in the current environment, much more investigations, actually we see the environment only supporting buyouts more and more. I think the other thing is, and I say it from 2 years of limited experience from IBC, that itself will now promote buyout in some form, because traditionally capex businesses, I would say, have used banks for buyouts. They have used borrowers' money to pump in capital. That's not available, one, because banks are not able to lend. 2, for the first times, they are also seeing that they can lose control of business to creditors. And instead of doing that, they may actually look at investors who are ready to do a buyout because they come with deeper pockets.
Thank you. Vishal, you're the man in the news. You made the latest buyout. True North bought out Max Bupa. So, given your experience, why do you think owners are, promoters are willing to give up control? And what kind of expertise, because this is all very new, it's all untested so far, except for, for a few cases. What expertise do you as a PE fund need to bring to the table to make a go of what you've bought?
In our experience, I think the key thing to make a buyout successful is our ability to attract the right leadership team to that business. Can we find the right CEO and the next level team to come and partner with us and say that, yes, we believe in this business. craft out a co-created strategy and really back them.
Tri-Legal presents Mint India Investment Summit and Awards. Knowledge partner, KPMG.
The summit also probed minds of global and Indian investors on private equity minority investments. Can less be more?
I think the key success factors in minority investing is to be focused. And so we focus on 2 or 3 sectors and we go very deep. Financial services, consumer, healthcare, business services. These would be some of the sectors we focus on. The second is to have a very proactive and long-term sourcing approach, because in minority, especially in the mid-market where we operate, you need to spend a lot of time developing and cultivating relationships. And so on average, we might take a year and a half of engagement with a management team or a founder before we make the investment decision.
Our fundamental philosophy is that we partner with high-quality teams, right? And those high-quality teams can be founder teams, can be management teams, and we are their partner to take the business from where it is today to the next level, right? And what really drives that is alignment with those teams, and that's really our focus area, to ensure that there's complete alignment up front in terms of strategy, in terms of execution, in terms of the exit path. Once you have that, right, it doesn't really matter for us whether we are, a minority partner or a control partner. At the end of the day, we are looking to partner with teams, right? And that's where our DNA comes in.
When we are looking at a buyout deal, vis-a-vis when we are looking at a minority deal, right? The general view that people have is that on a buyout deal, given that the financial sponsor is going to go and run the business and going to back a management team, there will be far more rigor in terms of diligence, in terms of looking at the business, in terms of all of those things. But when we as advisors, when we step back and when we look at it, actually it's reverse. Because when you are going and doing a buyout, right, they ask us questions in terms of corporate governance, good or bad, fixable, not fixable, right? Business, good or bad, growth, no growth, etc. But when we are doing minority, right, they ask us questions around corporate governance, tax compliance, promoter mindset, how they have dealt with you. And it's far more rigorous, because at the end of the day, they will not have control on the company. And they will be dependent on the mindset, the direction, and the thinking of the promoter in which, how he wants to run the business.
Both in the case of buyout and in the case of minority, it is pretty much what drives the need for a technology being looked at as a strategic enabler for value acceleration is the alignment between the management team and the private equity firm. So I have had situations, we have had situations, and even in India, I have had situations where there's a buyout, but somehow that alignment is not there and we don't get to step in. But we have had situations when there's only 10% stake, private equity firms are, if the firm involved is convinced, the management of the company is also convinced, and we get a very strong look in.
Not only did the industry veterans share their views on key success factors for minority investing, but also spoke about venture capital, building the billion-dollar business.
I think in our mind, there's no hierarchy in the 3 important factors that make a large business. It's tech, it's basically product, it's team, and it's the market, right? And no real preference or no ascending or descending order amongst the 3, right? And if we look at all the 3, right, in market, India grows at about 7.5% real GDP, 7.2, 7.3%. That comes to a nominal of about 11%. Right, you pick up consumption, you get another 3% kicker. You pick up a sector inside consumption, whether it's FMCG, whether it's retail, whether it's healthcare, you get another 2 and 3%, and then you get another 3%, 4% from picking the right company. Right, that CAGR is in a 7 to 8 year cycle. Right, it gives you an outcome that's very large. Maybe a unicorn that you want to define, or a fairly large business that can run on itself.
There are different types of opportunities in the world, and therefore there is no one type of person that can sort of be the cookie cutter answer to where money making is done. And you need to look for the right sort of correct horses for the correct courses. as an example, when we first, or anyone first meets Girish at Freshworks, the thing that blows you away is just the sheer clarity of thought in that case. If you meet Dipinder at Zomato, I think just the audacious ambition to create something that doesn't quite exist. You meet a Ritesh and you'll be blown away with the guy's ability to transform himself and learn faster than anybody else and evolve as a leader. So I think there are these different spikes that you're able to perceive when you sit across these special founders. And to us at least, early stage investing is all about finding ways to work with them.
I would like to specifically mention the market forces because very often if you have picked a great team but the market trends are going against you, it's very, very hard to build a business, even if it's a fundamentally sound business. On the other hand, very often a rising tide will float all boats. And we have found that a big part of venture success is being able to forecast a market whose time has come.
The summit also put a spotlight on how technology can be embraced to create enterprise value.
When we talk about technology and private equity, what are the kind of approaches that investors could look at?
So Leslie, going back to your previous session, which was quite fascinating, I must do battle on behalf of technology. It is not consigned to the enabler status. And what I have to say, there was a subtext in the conversation you ran. It was not just product, market, and people. The subtext was, if product and market and people give you some value, scalability of the value is what leads you to the billion-dollar conversation you had. The question I was asking myself is, the underlying subtext was aspiration. If you're working with a team, then their desire to do the execution, to drive fitment, to be persistent, etc., etc. Today, when you look at a Deep Kalra, there is enormous aspiration which took Deep where he is. My argument is, at early stage, if you look at the founder or the management team, and they have a technology vision for scale, that is probably the most risk-free fashion in which you can assure yourself, without that team investing in products, screwing up their working capital position or buying assets or hiring people, they can demonstrate to you their aspiration for growth.
Just building on this whole topic of technology being used to scale up businesses, can you give us some couple of examples?
Firstly, if you want to scale up, right, you will have to change transactional clock speeds. And speaking from SAP clients that we've seen, take Reliance Jio, right? Reliance Jio, that whatever 3-month onboard of 100 million consumers on a KYC-based onboard is the world's largest onboard exercise. This is bigger than Facebook, WhatsApp, what have you. The world's largest onboard exercise happened here in India. Now, understand that till that happened, our view of a KYC-based onboard is it takes weeks. And here was Reliance who did it at microseconds. So there was a fundamental shift in clock speed which drove, that entire movement.
The day one of the summit was culminated with Mint Investment Awards that recognized and celebrated the success of financiers, bankers and funders who have been at the very top of their game.
So, ladies and gentlemen, of course, the most prestigious award of the evening, Hall of Fame Award. Can we have a huge round of applause for Mr. Nimesh Kambani? Ladies and gentlemen, keep the claps coming. Our next award is Best M&A Deal of the Year. The Best M&A Deal of the Year, ladies and gentlemen, goes to Walmart Flipkart. May I please invite Mr. Rajneesh Kumar, Chief Corporate Affairs Officer, Flipkart, to please join us on stage to receive the award. Moving on, ladies and gentlemen, our next Mint Investment Award is for Best Private Equity Deal of the Year. And the award goes to Vishal Megamart by TPG. And our final award this evening for Best Venture Capital Deal of the Year. Ladies and gentlemen, the award goes to buyouts. May I please invite Mr. Arjun Mohan, Vice President Marketing, Buyouts. Please join me on stage. And requesting all our awardees to please join us.
Tri-Legal presents Mint India Investment Summit and Awards. Knowledge partner, KPMG. Focus. Ideate. Innovate. Enable.